Speaking of PulseChain, if we want to turn the page over to that ecosystem, so a viewer just before we went on the air actually reminded me in a comment on one of our other videos. You and I had a gentleman's wager on last week's program about the PulseChain price, and I said just put you on the spot and said, "Hey, do you think Pulse goes below SAC rate ever again?" You kind of hemmed and hawed, but ultimately said that you think that it would. I steadfastly said that it would not go below SAC rate again. So you have won said wager. So congratulations just for everybody for the prices being down right now. You have Ewok to blame because I didn't, that wasn't something that I programmed in. But yeah, we do sit here a little bit below SAC rate. Since Sunday, we really started to see some of these prices come down. We sit with Pulse at just below SAC rate, about the 4096 right now. Pulse X is now the whole way down to 62% below the SAC rate, and that ratio, which maybe we can talk about for a moment between Pulse and Pulse X, has crept back up into the 2.5-ish range, which frankly is where it was not even a month ago, I think.
Sure.
So not that big of a move. But incentive token under $5, about 475 now. Hex at just under a penny. And eHex, I don't know if I should report on this or if I'm going to get in trouble, but it's at 0.2 of a penny right now. So, yeah, things are down. And, we saw some wallets that may not be connected to a sacrifice wallet making some moves when PulseChain kind of ever got down towards that SAC rate. But we've seen it come down below there right now. So if you want to take a look at the Pulse chart Ewok, and maybe we can just kind of see what we're seeing here. I mean, we had that beautiful like stair step thing going for a while. Things just were very, very bullish for really about a couple of months, just the way things were looking there. And now we've come down into a level, I mean, where there is historical support, more so from back, last summer after launch, probably for a bit. But yeah, what do you make of this? And I still think in this range, like we're gearing up here. I mean, I don't think we go very much lower than this. I mean, again, I didn't even think we would go below SAC rate. So what do you make of where we're at right now?
Well, I drew this line on here when I was predicting where I thought it could possibly go, and it was right about 8,500 or the 4085, and it got close. And I think it technically still could bounce down a little bit further. I think what's happening is when these bigger wallets step in, and there's buy pressure, there's a couple things that happen, right? They're being so heavily reported on that everybody's saying, "Oh, here comes this wallet is buying." It's a big signal to the traders who don't really follow the wallet, or they're not doing their own blockchain analysis or anything like that. It's a signal. They're saying, "Oh, let's let it buy it up, and we'll just sell it right off, and we'll buy it back at a little bit lower." And I think that's what you're seeing on a lot of these moves now. I think that entity will soon get tired of that and just say, "Screw it! I'm waiting until you guys shake it all out before I start, interfering or doing anything more." So I think that's what's causing it a little bit. However, I do think that some of these levels here people will start to step in. I mean, that's what it's got to take. You can only rely on green candles so much to market with. And when you have green candles and they immediately get sold down, it's just not good marketing, right? Mm-hmm. So you either have to let it play out or dump a pile of cash into it to just run right past it. And then again, you still have those people involved that are traders. And we've fought for a long time to tell people that trading is not the right way to do this. It should be about long-term holds, delayed gratification, dollar cost average in, and let the cycle play out. And when you onboard people, you tell them the same thing. But when you get a brand new blockchain, you do attract a lot of that trader mentality. A lot of people playing the games in and out of coins, thinking this one's better than this one, so we'll sell positions, and they're just all over the place. So it does take a while to settle and even out and let the money get distributed correctly before you can really have a floor and really start to run. But as time goes on, as more people lose on trades, the less there are, because they start getting burned and realize that that's not the right game to play. Or they take a look at their wallet size and be like, man, originally I had a half a billion coins and I'm down to like 400 million, 300 million, because I've been in and out of all this stuff trying to game the system, and it's not working so well for me.
You brought up a great point that I hadn't thought of as much, and I know people have been tweeting about it a bit. And full disclosure, I mean, you and I both have been trying as much as we can to stay off of Twitter the last couple of weeks because it's just been horrible. But yeah, I think some of these people that do report on the big moves, and I know that Martin account is one of them, and then there's like I don't want to call them bot accounts, but like ones that are just anonymous, like whatever, PulseChain moves and stuff like that. You do bring up a good point about the front running thing. It reminds me, as somebody who used to be more interested in the sports betting world, of like there's a couple big time like betting syndicates out there that were essentially like, I think they call them like screen scrapers, basically, where it's like you would just be looking at all of the odds boards and you have like 30 different sports books up there. And like you can't do this as much anymore. But back in the day, you could start to see moves happening and then just bam, like all these different accounts you have start front running moves at different books that had sports books that hadn't moved yet. And while the edges there, were much smaller, I think, than what there is here. I mean, you're literally getting signal like, oh, hey, a $500,000 or $1 million buy might be coming in a few minutes, and you can make moves. I mean, you make a great point. And while I don't think that doesn't matter as much, I think when everything's going up, like when the whole market's kind of pushing up, I don't know that will be as impactful. But certainly right now, where we're kind of like 2 steps forward, 1 step back, 1 step forward, 2 steps back. You're seeing that. I think you're definitely seeing that. So I've seen people saying like, maybe I should start reporting on them, or we should start reporting on it, or whatever. I think I personally think I would appreciate that, but it's a Pandora's box that's been opened. I mean, it's like trying to say now, like, you know what? No more sandwiches. We're just going to ban sandwiches. The idea is out there. We all, people eat sandwiches. So I don't know. What do you make of that? I mean, maybe for the accounts like that Martin account, and I'm missing other people, but like people who individually are doing it themselves just to look at on-chain data. But yeah, what do you make of that? I mean, I don't think that's something you can just like put away now,
Well, I think they can take advantage of it, though. I think what needs to happen is, if they really want to offer that service, maybe privatize it. You know what I mean? And make people pay for it. Lazy people are not going to pay for it. Some of the traders might, but it's going to eliminate probably half of the people that are trying to front run it. It's the lazy ones that aren't really doing any kind of research at all. And I remember, I always appreciated Silver, the Antidote. His account, his was private, and he would put hours and hours and hours of work into studying a lot of different wallets and movements and game theories and things like that behind a lot of what was happening. But that was when it was just Hex, right? So I mean, there was it was narrowed down a little bit more. Now that it's an entire ecosystem, it's a little bit harder for people to understand who's who and who the players are. But I think it would be a good opportunity for people like that to, if you want to create a subscription and broadcast it there, an idea for them. That way it's not general public. And I hate the thought of people just doing it for the clicks and the likes and things like that. Right. It doesn't serve that kind of purpose. It creates the trader mentality that we've worked pretty hard to get away from that, and explain to people that time in the market is much better than trying to time the market. And now that's just gone by the wayside, and people are back to being degens. So.
Yeah. I think closing it would be something that those individuals would probably even benefit more from too. I mean, like if you could just get paid directly, why not? By some people. So I don't know. It's not one of those things you could just snap your fingers and make go away, but it'll be interesting to monitor for sure.